Hello and welcome to another update video about Verasity VRA. So on the VRA chart, we've seen a lot of sideways movement over the recent months. Yeah, if we zoom out, you see that. Obviously, the price rallied quite substantially from the June lows, and then especially from the September lows into these November highs. Yeah, around, what was it, just below a cent. So since then, we've seen very, very choppy corrective pullback. I see it as, yeah, corrective pullback, really. The nailing down the exact micro count is difficult, I have to say. It is not very straightforward, especially due to what's happening here. So we have a three-wave rally, really. The move down looks choppy as well. Let me take you through a couple of ideas that I have. And in my main idea, or my preferred scenario, but I'm not entirely sure if this is what we'll get. I have a wave 1 to the upside into the February 2023 highs, an A wave down, okay, an overshooting, no, it's not even overshooting, high B wave, just normal B wave, and then a C wave down. So typically what you want if you have an ABC structure, by the way, it would form a wave 2. In this pullback, we would then normally see this move down, break below the A wave low, and that would be 0.0038. We are far away from that level. It rather seems as if the market wants to turn around a little early, which is what takes us to the additional or the second scenario. But let me take you through this first. The idea would be that on the VRA chart, the market could easily still come down here in this, in a wave 5, in basically an ending diagonal, okay? So the idea would now be this here was a wave 4 top. So wave 1, wave 2, wave 3 as an ABC. Wave 4, this is now also an ABC. And the wave 5 could then be basically the last wave down. And the invalidation point for this scenario as it is at 0.0065. So we might get one more low, we might not. But overall, looking at the bigger picture, it suggests a bullish outcome. To account for this uncertainty that I just explained, I have my support zone defined here on the chart. These support zones should act as support, as the name suggests, and these are the zones where you might want to look for a potential entry point. But now we've already reversed out of my zone. Essentially, that's what they do. They should lead to a reaction, and at any point when the price reaches this zone or these zones, we've got them on all sorts of charts, then you have to expect a reversal at any point. The microstructure is not so important, okay? Sometimes people say, you were waiting for another low. It's not about that, okay? The micro count is only a roadmap. What is more relevant is the actual price range, the levels where we expect a reversal. The microstructure itself is always flexible, has to be changed. It's not about the micro count. It's about the levels that the micro count reveals, okay? Or generally the wave count reveals. So this already did lead to a profitable trade for anybody who entered positions in this support zone. You see how relevant this Fibonacci level was, the 50%, and now we are already moving up. So that takes me to an alternative interpretation, which is a bit tricky, to be honest. Different ways. I mean, there are different possibilities here. One possibility I'm thinking about is actually that this here was not a wave 1. So basically the idea is 1, 2, 3, and so on. The problem is, in a wave 3, we have to have an impulse. So my alternative, let me take you through the alternative idea. The alternative would be that this is just an A wave. This was wave B, the low in June, and this is, instead of a third wave, this is just a C wave. And then we've had here ABC in wave 1, because you can see this is a 3-wave move. This here was a wave 2, so 1, 2, basically that we are forming an ending diagonal, which is also why the wave 1 can be an ABC. The wave 3 would be an ABC. Then we would get a wave 4 and a wave 5 as an ABC. In this scenario, we might not go much lower, okay, and that's it. That is why I have added this support area to basically account for both scenarios. And the good news is, in both scenarios, I'm watching for rising prices and essentially a break above the B wave high at, what is it, 0.0091. So it's all about just watching and waiting for a reaction so that we can confirm that a low is in. At the moment, it's obviously way too early for that on the VRA chart. It takes minimally a break above that 0.0065 level. That's my update about VRA. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.